Hi, Norman Hallett here with your next 4-minute drill for traders. Let's take up the question, why do you trade? Is it to make a steady income? Or is it for the long-term growth of your investment capital, your IRA, or say your 401k, etc.? Do you trade because you like to take intellectual risk? Is that why you trade? For whatever reason you might have to trade, you're probably like all the rest of us who sometimes forget the basic pretext for our personal eccentric interests on why we trade. Often we get so wrapped up in just winning that we forget why we really trade, what we're really trying to accomplish. For example, if your goal is to have an annual return on your investment of at least 35%, do you know what your monthly trading activities have to produce to keep you on track for that 35%? For investor type traders, knowing what you want to accomplish can have a lot to do with the type of trading strategies you choose. For example, if you need 35% average annual return on your trading capital to retire in 10 years, you would need an average monthly ROI of at least 3%. There are some conservative strategies that can produce that type of return with fair regularity and little risk. For instance, writing covered calls or other premium collection strategies. There are some good examples of that kind of investing. If your goal is just win as much as you can, that nebulous goal is not a measurable goal at all. Indeed, it's the goal really of a gambler. Or you may take on the brutal job of becoming a day trader, slumped in your chair, eyes glued to the screen, looking for any movement. You live to spring like a starving predator on any target you sense has some potential of moving your way. You measure your progress inch by inch, trade by trade. If your strategy is to have a diversified portfolio of stocks, bonds, mutual funds, and other long-term type holding positions, you may choose to trade a portion of your portfolio to provide some high-risk reward opportunities and some hedging for the long-term portion of your portfolio. This strategy combines the conservative wisdom of letting the majority of your portfolio flatten the volatility of time, but also allowing you to participate in using volatility to make a higher yet less consistent gain. Of course, if you find you are good at trading the short-term portion of your portfolio, you can always slide some assets from the long-term hold portion over to the trading portion of your portfolio. This strategy of mixing long-term investing and short-term trading requires totally different goals for each section of the portfolio and a broad range of investment knowledge. For goals to work their magic, you need measurable objectives. Ask yourself, what exactly is it you want to accomplish with your trading, and find a metric to measure the progress, and you have to be specific. Clarifying your goals so you can measure them is the essential first step to developing an overall strategy. Not only that, your goals will greatly affect the style and vehicles, as we've discussed, in which you're going to trade. I would venture to say that the vast majority of investors and traders have goals but no metrics in place. Just to get your dendrites firing a little bit, let's take a look at some possible goals and see where your interests in trading might lie. For instance, a goal like make enough to take a nice vacation or buy a new toy, a new car every year. Another goal may be to make enough money to leave your job and become independent. Well, actually, looking at the clock, we're not going to have time really to go through these goals examples this week, as our 4 minutes really are up right now. So Don't miss stopping back next week. And for now, as always, until next week, stay disciplined.